dollar one day is up on expectations of a deal, then it's down because expectations have been tempered. How does it play out? Well, the movement in the markets, given that every day we're getting new bits of information?
Yeah, obviously you have to look at the various segments of the market. We just heard sort of the switching in and out of various sectors in the equity market. Yeah. I would zoom in probably on the one element that Nick just mentioned, that the whole thing, or good part of it, at the end of the day, is going to be debt financed. And therefore, one of the things that we mentioned, or we talked about earlier on radio, is the flattening of the US Treasury curve that we've seen, because obviously the Fed has been putting upward pressure on the short end and the long end hasn't kept track. The question, I think one of the biggest questions for 2018 is going to be whether that can reverse. And that is, in my opinion, driven by two things. One, how is the impact of further funding? In addition, whilst the Fed is releasing some of their balance sheet, how's that going to impact the treasuries at the longer end of the curve? And secondly, in an environment where the economy is doing quite well and in the short term at least receives another boost, how are wages going to develop, and is that driving up inflation expectations, which are still at this point in time about 60, 70 basis points, depending on what measure you look at, below the historical averages. If two of these things are coming together, I think there's a reasonable chance that the curve might re-steepen in the short run.
Will they come together? Nicholas, will the curve re-steepen in 2018?
It's hard to say. It's very hard to say. I mean, I do have a slightly probably more bearish view on the cycle. So, I think most forecasts are for relatively strong growth in the U.S. and globally. But if you look at the ISM, you look at some of the lead indicators of the industrial cycle, some of the indicators coming out of China on the credit side, I suspect we've probably seen it's about as good as it gets in terms of the industrial cycle. If that starts to moderate next year, even if inflation picks up, which I agree, I think it will, it always picks up with a lag, we're going to be in an interesting situation where the Fed may feel that it needs to tighten, but if markets start focusing on the growth outlook, perhaps we see a further flattening. But we'll see.
Anything to add to that?
Well, I think that's essentially what we're currently that's already in the making, where the market says, well, the Fed is tightening regardless, but the long-term outlook is not that bright. But again, I come back to, if you look at the anatomy of nominal bond yields, what you see is the inflation expectation component is extremely low by historical standards. If we get any whiff of a change of that, even in the short term, I think the impact, at least in the short run, on the Treasury market in particular, could be quite meaningful.